Why is nobody talking about this besides you?
Well, from what I could tell, because I'm doing a doctorate on it and like talking to people in the industry and stuff, and from what I've seen is the people in the finance industry at the highest levels, they are aware of it, but they know like a piece of the story. They know like, okay, well, yeah, the client's assets are being used. They don't really know about all the legalese involved with it and some of the broader structural things and the implications of it all. So
instead of focusing on winning arguments, we're teaching the basic fundamentals of sales and marketing and how we can use them to win in the world of politics, teaching you how to meet people where they're at on the issues they care about. Welcome to the Brian Nichols Show. Hey folks, Brian Nichols here on the Brian Nichols Show. Thanks for joining us. Looking forward to today's fun-filled conversation on Indiana. The Brian Nichols Show is powered by our phenomenal sponsors, Amp America. Get the news you need to know without the corporate media bias or fluff. And also the Brian Nichols Show powered, yes, by Cardio Miracle, the best heart health supplement in the world. If you want to learn more about how to lower your blood pressure, lower that resting heart rate while improving your pump at the gym, stick around. We're going to talk more about that later in today's episode. But first, what is the great taking? Let's talk about that. CBDCs. What is the Uniform Commercial Code? How is this all impacting finances behind the scenes? This is all over my pay grade, so I need some help today. To join me discussing all that and more, joining us here on the show is James Patrick. Welcome to the Brian Nichols Show. How you doing?
Yeah, thanks for having me.
Great to have you, James. Looking forward to today's conversation. But first, do us a favor. Introduce yourself here to the Brian Nichols Show audience. And what is this great taking we're talking about today?
Yeah, I'm a filmmaker and investigator and economist, and working on this issue of I make documentary films to basically give people a high level understanding of these, this sort of some of this conspiracy world, the plotting, all this intrigue, the fact that like in 2020, I felt like I made the film Planet Lockdown because it's like I heard all these stories for years, but then it felt like every conspiracy theory came true in 2020. So I'm just basically giving like credible, high level, high quality expositions of these issues, getting dignitaries around the world to talk about these controversial issues. So this great taking issue is really the biggest financial fraud story I've ever heard of, I think, in known history, where basically everyone's stocks and bonds, when you buy them since the 70s, really, you're not, well, since the 90s, when they changed the code, you no longer have clear title, full legal ownership of your securities. And since before that, since the 70s, the banks have been using and playing with everyone's assets, everyone's stocks and bonds that they invest in for their own gain, posting these assets as collateral, basically backing to activate these bets, like derivatives contracts, bets that the price of the dollar will go up, the yen will go down, gold will go up, oil will go down. These are all called derivatives contracts. They're derived from the movement of something real. So the contract doesn't actually involve an exchange of the real thing, but it's based on price movements of the real thing. So they call them derivatives, but I can just call them bets for simplicity's sake. But basically this, doing a doctorate and writing a monthly report on this for people to understand. But basically, from bankers I talked to, I said, when did this practice get to be really large scale? And they said really in the 80s. And so the first step was in 73. They started to pool all the stocks and bonds in one trust in New York called Deposit Trust Clearing Corporation. So they called that dematerialization. They got rid of the paper certificates and said, hey, let's keep all the stocks and bonds in one massive pool. Then from there in the 80s, the bankers started dipping into all the stocks and bonds and playing with them. In the 90s, they legalized it in the Uniform Commercial Code and created a sort of legal justification for what is really a fraud. So yeah, you got me and follow me till now.
And by the way, like the reason I'm letting you go because this is so dense for your average person, right? And we talk about this in the show a lot. Meet people where they're at and the issues they care about. The average person is just told from the start, like, hey, invest in your 401k, right? Do some investments in the stock market. You're going to be fine. This is how everybody does it, right? But we don't really go beyond that, right? You're told this is the right thing to do, and nobody takes a step back to say, help me understand why is this the right thing to do? And it turns out that a lot of it just feels like it's a one big casino game that we're all playing, whether we realize it or not. Is that fair?
Yeah, I mean the stocks and the market prices are casino games, but they're affected by these derivatives. So a lot of markets are manipulated through these derivatives, and the price of gold, like on the New York Gold Bullion Exchange, they price the value of gold based on the which month over the next 12 months has the most amounts of trades in gold. So they can use other people's money. The biggest banks are printed out of nothing and bet on gold and drive the price up or down artificially.
Wow.
So I think a lot of the market is already artificially driven. That's a whole other issue. But this issue is really that number one is this fraud of the biggest banks. It's essentially the members of DTCC that are using everyone's stocks and bonds, their clients' assets as collateral and derivatives. But it gets worse. It's not just like, oh, we used it once. It's like it'll get swapped up into one contract where they'll say, oh, well, trade this one stock for a treasury. And then it gets posted as collateral again and again and again in what they call these collateral chains. So,
I mean, and James, I mean to interrupt, but like this brings me back to when I was a kid, and I'm going to use a really silly example, but Pokemon cards, right?
Mm-hmm.
You get a here. This will make all the millennials happy because I'm going way back to the 90s and 2000s. You get like an energy card, a little energy card, and you start to trade it with somebody. Hey, let me trade that for your Bill's computer trainer card. Then you trade that for, hey, let me trade for a basic Pokemon Rattata, and then all of a sudden you start trading back and forth, and all of a sudden you end up trading down this progression where I end up with a Charizard card, which for folks playing on the home game, Charizard was like one of the most sought after cards ever. And by the way, it's like worth $500 now on average, right? But that's what it feels like, is that you're just trading and trading and trading, but there's no real value, I guess, associated to where you started, to where you're going. It all just feels like a shell game.
Yeah, it's like, well, they created this kind of like ethereal finance industry of all these instruments, all these bets, all these things that is so dwarfs the real world that it threatens to destroy the real world if there's a problem in that area. So I guess just to kind of take it back to this issue of the using everyone's stocks and bonds on these bets now, because they were able to use everyone else's money, not their own money, they've gone more crazy, and there's been a big bubble, a big explosion of use of the collateral, of use of everyone's stocks and bonds, posting them to these bets again and again and again, and sometimes up to 20 derivatives contracts, collateral chains of again and again and again. And so just in 1994, there was a revision of Article 8 of the Uniform Commercial Code. Uniform Commercial Code was just kind of a standardization to standardize laws of contracts between states. So if states didn't have different laws for things, there could be some uniformity. And it was founded in the late 1800s, and it was largely okay. I mean, it was a pretty good thing. But this is an area where those banking interests have kind of corrupted it and inserted laws that are legalizing this fraud. And so they did two things in this 1994 revision of Article 8. And basically this film I did, Stop It, The Great Taking, is about the legislative effort to stop this and correct the Uniform Commercial Code. So I'd like to stress that people can do something about this. We all need to look up our state representative and call them on the state level and say, we need this fix. I need clear property rights to my own life savings, my 401k. I mean, all the state's assets, every pension fund, every hedge fund, mutual fund, 401k, pension plan. These are all wrapped up in this. So in 1984, when they revised Article 8 to legalize the use of everyone's stocks, they did two things. One is they switched they said, you're no longer the clear owner of the stock. You're now a contractual claimant on the stock. You own a securities entitlement. You're a securities entitlement holder. So the significance of that is you have all the beneficial ownership. You have all the benefits of owning the stock. You can vote, you get the dividends, but you're not minus the legal title.
You will own nothing and be happy.
The legal title is actually residing with the Central Security Depository, the DTCC, Deposit Trust Clearing Corporation, New York. This pooled trust that warehouses everyone's stocks. They really are the owner, and then they can legally allow their members to play with the assets, which this is totally criminal. I mean, it should not be allowed. The second thing the uniform the 94 revision said the secured creditors of those derivatives contracts have priority to take the stocks in the event of the failure of the contracts. So if they go and bet these things 20 times over, and if all these things fail,
whatever,
the creditors of the contracts have a priority to take it ahead of the underlying owner.
Holy cow. Okay, now James, this is just like, okay, this is 30 years of this happening. So my main question is, how has this gone so unnoticed for so long? I mean, you highlight in the documentary, like, where's all this collateral coming from? Like, talk to us about that. Like, why do you think that there's been such a blind spot when it comes to like the media, the financial organizations? I mean, heck, academia. Like, why is nobody talking about this besides you?
Well, from what I can tell, because I'm doing a doctorate on it and like talking to people in the industry and stuff, and from what I've seen is the people in the finance industry at the highest levels, they are aware of it, but they know like a piece of the story. They know like, okay, well, yeah, the client's assets are being used. They don't really know about all the legalese involved with it and some of the broader structural things and the implications of it all. So we really need to credit David Webb for uncovering that as a really high level investment banker. Warburg Pincus, later he made his own hedge fund. Then he basically retired, and then he spent 20 years researching this and put together the pieces of the story into one coherent narrative. So when I was asking around to bankers, hey, is this true what he's saying? Have you heard of this thing? I started hearing things like, well, yeah, we have been doing that. And well, when have you guys been doing this? When did this get to be really big? Well, how long have you guys, when did really using everyone's stocks and bonds really take off? And they said, well, in the 80s it did. In the 80s, it was like whole hog. So it's like, I think David really put the story together. But now it needs to be properly communicated to everyone and explained in simple language. The average person needs to understand this, and sort of that's where I'm coming in here to help get the story out more.
Well, and James, you mentioned in the documentary there's a like I think you used the example of medieval castles, right? And you're talking about like how they use citizens as their shields. So like, is that kind of the comparison, like for historical context, or is there a way to break it down even more from what we've seen in the past?
David was using that analogy in the sense that your broker and your custodian who you buy the stocks from, they only have a bookkeeping entry to say Bob owns these stocks, and they're actually housed up at this central securities depository, DTCC in New York.
So it's more, so that right there, just to confirm. So that is more of call it an IOU. I'm just using that very rough example, but it's a piece of paper claiming ownership of something. Or I owe you something, but
you're the underlying, when you buy a stock, you're buying a contractual claim on a stock. Your broker and custodian they only have the record that it's you who owns it. Up at the Central Securities Depository, there isn't a record of you.
Roger. Okay, so it goes from me to them, from them to up there. Okay.
This broker you're dealing with, they have a record of that entity's account at the DTCC, but DTCC does not maintain a record of the individual client. And it was structured like this to create a little legal Chinese wall barrier. So, and they put in the code too, you cannot sue DTCC because DTCC is the one committing this fraud. They're the ones that should go to jail for doing this. But they wanted to stop you from the individual customer from being able to sue them. So they created this legal barrier saying you can only sue the broker. You cannot sue. So when this market collapses and all the assets go and all these biggest banks seize them all, we're going to be left with all these with all these empty accounts and suing all these brokers. Wow. And the brokers they're going to be up shit's creek. They're going to be facing all these legal cases. And in the way the law is written, it's sort of like it's like there's no one there to sue. They tried to set it up so that legally there's no recourse you have. But if we recognize this, we can fix it and undo this thing a little. So the analogy he's saying the little finance guys, the little financial services guys, the brokers, the custodians you're buying these stocks from, they're the medieval villagers invited into the castle keep, and the Lord is the too big to fail bank playing with the stocks out of DTCC. And the bankers, when we've been for introducing these bills in these states to correct the UCC code, to restore to basically to fix this, the big bankers have called in the financial services associations, the brokers associations, and all these people, and kind of presented it to them like, look, we're on the same team here. They're attacking, this law would screw up the system. It'd be bad for all of us. And what David's analogy is saying, look, that's not how this works. You guys are going to lose. You're going to lose out. You're the ones who are going to be left holding the bag. You're going to have all these angry clients calling you up, suing you, and you're just the idiot that's going to take the flack for their crimes. Wow. So that's what that analogy is means.
Okay. So and I'm not sure if I'm doing an accurate comparison. I mean, it's not going to be a 1-to-1 comparison, but I'm not sure if folks are familiar with, there's that movie from 2019, 2020, somewhere in there, is The Big Short with Steve Carell. Is this on par with what we saw there, where they were basically, I mean, they were creating these crappy mortgages for folks who could never pay them back, and they didn't care because they were going to be backed by the federal government regardless. I mean, is this, I know it's not 1-to-1 in the comparison, but is this on the same scope and scale of what we saw there today, or is it even worse?
I mean, that's a part of the finance industry. They got a little wild repackaging mortgages. They'd take a mortgage. I think since the 80s, it used to be one bank in one house would give a loan, service a loan, maintain the loan, and you deal with your local bank through this course of your entire 10 to 30-year loan. In the 80s, they started to securitize them to say, oh, well, one bank will issue the loan, then they'll sell it to another one, and then you'll have these different specialized sectors of the industry that would deal with different parts of it. So that gradually started to happen more and more and more, the securitization and repackaging these things and have different specialized firms do the servicing, do this, do that. So you'd get a loan from one guy, but then you're dealing with like entities that might be resold again, and now you're sending your payment into a different company. I'm sure a lot of people have.
And by the way, like, people see this with like student loans right now. That is very common. My wife got a letter like a year ago, like, oh, your loan has just been acquired by name the entity there. And she's like, oh, okay, sure. I guess I'm paying this company now.
Yeah, it's weird. It's a little weird, but so that's had an effect to kind of like, I don't know, it's distributed. You're not dealing with any real person anymore. It's just this faceless like commodity being shuffled around. But anyway, so just the industry's gotten a bit like that. But that's the problems that caused the 2008 crisis are still with us, and they're worse now. I mean, they're deeper. We've really had 30 years of bubbles. I mean, we had the dot-com bubble in the late 90s. That got reinflated. We had the 2008 crisis that got reinflated. We've had ones in 2014, 15 issues, then that got reinflated. So most financial advisors are not. They're looking at an artificially reinflated market for 30 years of bubbles, constantly reinflated. We've never had the real correction to where the prices collapse or come down to what real customers can afford. The central banks and other things, they keep pumping in more money. So,
it's wild. We spend years thinking our 401ks and investments are safe, only to find out that the system's been using our hard-earned assets as collateral for high-stake bets behind the scenes. Talk about losing control over your future. But let me tell you something you can take control of. Your health, specifically your heart health. And that's where Cardio Miracle comes in. It's the nitric oxide supplement I've been using for over 2 years now, and I'm telling you, it works. Lower blood pressure, better circulation, improved endurance, and yes, it even helps keep that resting heart rate in check when you're listening to an episode like this. So don't wait until it's too late to get ahead of a silent crisis. Just like your finances, your health needs attention before the collapse. Scan the QR code right here on the screen or head over to cardiomiracle.com and use code TBNS at checkout to get 15% off your order. Again, that's cardiomiracle.com, code TBNS at checkout. Take back control because your heart deserves better than a system rigged against it.
Yeah, we're potentially on the cusp of a bigger collapse that could go far deeper if that's what the guys at the top want. I mean, this thing could be unraveled peacefully. We could be adults, do the mature thing, unravel these crazy bets, and have a peaceful resolution. But if history is anything, we notice that if we learn from history, we'll see that a lot of times oligarchs use crises to forward their interests, to get more reforms. They say, "Oh, it wasn't our fault. It was a systemic issue. It was structurally not. We need these reforms," and then they get more power and more power. So now we're moving into this kind of technocratic thing. We got CBDCs being developed. The next big financial crisis could be used to really foist a very, very malicious reform of our money system. We see Elon Musk running around promoting universal basic income. For years, he's been promoting that CBDCs are very linked to welfare payments to gull the people into accepting them. So this is a very, the UN has these silly initiatives called like C30. They had mayors in 10 cities or more around the US saying, "Oh, we're going to have 3 pairs of clothes, live 15 minutes from our house, have one vacation every 2 to 3 years, and not eat meat, milk, or meat or dairy." So they're talking about a poorer world where we're peasants, we're on welfare payments. Like we're much richer now than that. We're in a richer society than that. So it sounds ridiculous, But a lot of the things the UN has said for many decades has sounded ridiculous. But then with COVID, they all got teeth, and they're pushing these crazy regulations down our throat. So I think we should listen to what they're saying, even if they sound like lunatics, because these are plans somebody's cooking up. And if we got now I found out about this securities issue, this massive collapse. They have the right to take all the assets, and then we see them talking about a poor world where we're little peasants. I think let's put 2 and 2 together and say, look, this is potentially the plumbing, the engineering of how they want to collapse it. Take the assets, make us peasants, put us in the CBDCs, and then you're getting a more coherent story,
Yeah, well, when somebody tells you who they are, believe them. That's what I've learned. Now let's make this very real for people, James. So for the average person who's listening today, they have 401ks, they have IRAs, they have brokerage accounts, right? I mean, what's at stake for them? And let's break this down like to the average investor. Like, how is this going to impact their immediate financial future, their long-term financial futures? And I guess in what kind of event could their assets here be at risk?
I mean, the whole account, the whole fund, all their investments could
just gone. Wow.
Could get taken as collateral, and you could maybe sue for them, but really you wouldn't really have a legal right to get them back.
That's bonkers. Holy cow. Now you mentioned, by the way, that there are folks who are starting to try and fight back. And I think there was some legislative efforts. I think it was in South Dakota and Tennessee, if I remember correctly.
The film covers 2024.
Yeah, that's right. So talk to us about that. Like, is there actually some groundswell to correct this? Are we going to see things hopefully get better? Or?
Well, I mean, Glenn Beck did a piece in 2024, and a lot of calls went into South Dakota and Tennessee. People put pressure on the state representatives. That's how that happened. Unfortunately, in 2025, we didn't really see people call their state reps. So that's what I'm really kind of pressing people now. You need to call your state representatives and inform them that this is an issue. There's lawyers in place we have that'll write the bills for the representatives. I'm available to help explain it. These lawyers are available to help explain it. David is available to explain it, to testify. I mean, we have everything in place. We have all the support, technical support to get bills introduced and passed, but we need people to really give a shit that they're going to lose their money if they don't, and that this is really a matter that this is a pretty dire matter. I mean, a financial crisis is sort of on the horizon. I mean, I think most advisors know that, but that people need to appreciate the risks that come with that. If these derivatives spiral down in price, the way they work is when you make a derivative, you have to put down initial margin. They call it like you got to put some cheese down to activate the deal, and then if the contract goes in your favor, you make more money. The other side of the contract has to post more collateral, and then you win. If it goes against you, they take your initial margin, the money you put up to activate the deal, and they say, hey, if you want to keep this alive, you got to keep putting up collateral. But the way this got structured, the way the system is structured now, a lot of this stuff is automated. And so I'll get a little more technical here, but when in 2008 crisis, these bastards used this crisis to create another institutional layer above the central securities depositories called central clearing counterparties. They were like, oh, these mortgage-backed securities, all these derivatives, they were so risky. They created such a systemic issue. Why don't we make all derivatives contracts have to be cleared through these centralized entities called central securities, so-called central securities, central clearing counterparties. So the regulators, by totally out of nothing, just made these new entities. The big ones are owned by DTCC. And so when you do a derivatives bet now, there's nobody on the other side. The only the central securities depository, the central clearing counterparties are the other side of it. So they said, oh, well, to prevent market risk, we need to force all the contracts through these monolithic institutions. But then that creates even more risk because it's not just like, oh, one guy's deal failed and one guy went bust, or
Not everybody.
It's everybody. So they didn't fund them properly. They said, we haven't planned for collapse, or what if there's big collateral calls and the CCPs fail? There's Bank of International Settlements documents, the own internal documents of the central clearing counterparties say that they haven't been planning for a failure, but the DTCC's funded replacement ones to spring up after they fail. So it's like, if you start watching, this is what I get into in these reports, is like, well, if you look closely at what they're doing, they're planning for the failure. They want it to happen. They're underfunding the CCPs. Instead of funding it more, they've pre-funded a replacement. So what it appears like is the purpose of the central clearing counterparties is to facilitate the collapse of the markets in a clean, controlled way, legally, and you can collapse the CCP. Start using another one. All those contracts go bad, and all the secure creditors of these chains of contracts get to take everyone's shit.
Good grief. Well, how about this, James? I know, and by the way, folks, like, I know
this is complicated. It's just,
no. This is awesome, but I'm setting the stage for the audience. We are trying to bucketize an hour and 46 long documentary into 30 minutes today. So if you want to learn more, right, dig really, really deep here, I cannot recommend enough the documentary. It is Stop It, The Great Taking. We'll include the link over to the YouTube here in the show notes. But I mean, James, the real, I guess, point for today is I want to get a call to action.
This
right?
is even more technical than is in the film. What I'm saying, you know.
No, and then by the way, this is good because my audience, they like to know the why behind the what's going on. So
yeah,
how about this? For those folks who they're listening today, they say, okay, I see it. There is a very real problem. I understand the mechanisms of why this is a problem, but now what? What is the call to action? What can people do today, right? Specifically with this information. I mean, I think it's very normal for your average person to almost feel like borderline helpless here. But yeah. I mean, this isn't a partisan issue, right? Like this is this is impacting everybody. So what can we do? Because in the world right now, again, setting the stage, we are at a very, very heated moment in our history. People are just battling nonstop from ideological lenses. So how can we help this bypass that perspective? Really hit people, like this is real. This is impacting all of us. Doesn't matter if you're a Democrat, Republican, progressive, or libertarian, or any of that in between. Like this is going to hurt everybody. So what is the definitive call to action today?
It's to call your state representatives and demand this be fixed. And the way the UCC code Article 8 was written, it says like entitlement holders have priority, except all the time when they don't. Or they'll say you have property rights, except all the time when you don't. So the legal strategy we've taken is just to strike these exceptions. and it's a very clean, elegant way to do it. It still keeps this whole system in place. I mean, it really should be reformed in a broader way, but just this is a very quick, easy way to do it. And then it puts the bankers on the defensive. They have to go argue why they need the exception to screw you, you know? So, and
by the way, really quick, James, what is their argument? What do they say is the argument to screw us?
Well, they don't directly address the issue. They try to say, well, it's a conspiracy theory. It's not true, but that angle didn't work because it's right there in the code. And we could say it. So then they go, okay, well, then they say they argue on these hearings. They say, well, you know, this would stop your ability to have a margin account. They introduce another issue that's not true to confuse and befuddle the matter. So they say if you struck these exceptions, you would not be able to use your stocks with your broker to speculate on other stocks, a margin account, to say initial, you know, like I said, when you make a derivative, you do initial margin. So sometimes if you want to, you can bet on stocks with your broker and say, well, I got 10 Apple shares. Let me post them down and I can bet on to buy 5 in the market. So if you lose the bet, they'll take your initial margin. So they introduced that saying, this would actually prevent customers from having margin accounts. That's total nonsense. If your property rights were more secured by having a clearer title, legal title to them, by amending this the way we're proposing, then your stocks would would be better collateral to be posting for a margin account. It would not prevent you from having a margin account. You would have an even stronger collateral to be posting because it would be clearer title to it, you know? So it's not, the argument is nonsensical,
right.
but because of the complexity of this or how unfamiliar most people are with this, they're able to sneak these little arguments through. And frankly, you know, in Tennessee too, they also threatened the state a bit. They were like, if you guys pass this law, we'll refuse all financial services to anyone in Tennessee, which is really racketeering. So that's because they're like, oh, well, the system won't, you know, it's not set up to deal with this. Well, we'll fucking figure it out. I mean,
for real,
like, you're this a provider, figure it out. Like, and then for them to say we're going to refuse service is pretty ridiculous. You know?
Yeah. All right. So I'm sorry to interrupt your call to action there. So it's to get involved, reach out.
Yes, to call your state rep and say, I heard about this issue. My savings is at risk. We need to do something about it. Now you could, because if this crash occurs, the whole society is screwed. You know, you're not going to live in a world you want to live in. Like, we got to fix it now ahead of this. If you can save your ass and buy gold and get physical share certificates from the broker, then they're not in this dematerialized form being used like that. You can do things like that, but again, in a generalized collapse, you're still living in a Mad Max environment. You're not in a. So the what's at stake is so big here. I think people gotta do something about it. We need to stop it. You know, that's why I called the film Stop It. If you'd like to understand things better, I'm selling this report, thegreattakingreport.com. And also at thegreattakingreport.com, I have a list of all the hearings. I put all the hearings and the full interviews and stuff. But you can also see the film on my YouTube channel, Big Picture of James Patrick. So the Great Taking Report is a more detailed report. That's also free for legislators. But I think people need to understand that they are going to we really got to do something about it. It's not a big deal to call your state rep, put in a phone call. These people are very accessible. I'm from Washington, D.C., and the federal congressmen are totally corrupt. They have no time for people. Your state representatives have the time. They listen to you. You know, they take the time. And if you're having trouble understanding this, like, there's truenorthpublicpolicy.com. These are the lawyers that'll write the bills. It's in the description of the film there. So we got everything in place here for people to do things. It's all ready to go. There's the film you can watch. Look up your state rep. I think there's a link to look up your state rep. Call them up. Say, I heard about this issue. We got to do something about it. And then we have a legal team in place that'll write the bills for the state reps and do something. But if that's not done, you know, we're pretty much screwed here. I don't think, if everyone loses their life savings, it's not. I don't know if I got this other diagram to explain this, but basically there's like about $130 trillion of securities of stocks and bonds in U.S. and EU, and there's now almost a $2 quadrillion derivatives market.
Wait, what was that number?
$2 quadrillion.
That sounds like a lot of dollars there, James.
It says 130 trillion between U.S. and in EU. It's there's Euroclear in Belgium. They house all the securities. In U.S. it's in EU it's Euroclear. In U.S. it's DTCC in New York. And between the two, there's about 130 trillion of securities. Off of that is made $2 quadrillion of derivatives bets. So we're going up 15, 20 to 1 up. Now the thing is, if that derivatives, it's like an upside down pyramid. If that thing collapses, then the scam is to sweep the collateral base, all the stocks and bonds that have been used to prop that up. So that's the scam.
There you go, folks. If that doesn't give you the warm and fuzzies, I don't know it will. Okay, James, I know we're over time today, so I thank you for joining us. And folks, this is your homework. I want you to go over to YouTube. I know I don't say that often, but I want you to go over to YouTube and check out Stop It, the great taking documentary. It's got James and David Webb here going through this in hyper detail. Now, and to James's point, we actually went a little bit more behind the curtain today, which I appreciate. So thank you for that. Now, James, with that being said, with my call to action, my final thoughts beyond going to YouTube is, folks, get involved in your finances. Don't just have your money go to this random account and say, oh, it's all good, because it's not. If you're not paying attention, somebody else is. Because what's the expression? Words speak, but money talks. I think that's something along those lines. And your money's definitely talking, but to them, saying, hey, we can start to make this a little bubble, and that bubble turns into a bigger bubble, and that bigger bubble turns into what? The biggest bubble? How many? $2 quadrillion? Holy hell, that's a lot of cash. So with that being said, no, James, thank you for helping raise awareness to this. You're sounding the alarm, canary in the coal mine, whatever you want to say. But with that being said, James, beyond following over on YouTube, where can folks go ahead and reach out to you on social media? Where's the best place to reach out?
They can email me at info@bigpicture.watch or info@thegreattaking report, or I have the CBDC film, cbdctheendofmoney.com. But yeah, bigpicture.watch. You can email me at info@bigpicture.watch.
Good stuff. All right, James, we're going to go ahead and say goodbye to the audience today. So, folks, if you got some value from today's episode, do me a favor, go ahead and give it a share. When you do, please tag yours truly at B Nichols Liberty. You can find me over on X, on Facebook, and over on Instagram. As for the Brian Nichols Show, we have the show air in both video as well as audio formats. So for video, you can go ahead and check us out over on YouTube, on Facebook. And by the way, we live stream our episodes every Monday night and Friday nights at 8:30 p.m. Eastern. So you can go ahead and check us out over on X and on Rumble for those live streams. And then if you want to listen to the Brian Nichols Show on the go, head over to your favorite podcast catcher. Find us over on Podcast Addict, on Apple Podcasts, Spotify, YouTube Music, wherever it is you consume your podcast. Hit that subscribe button. And oh, by the way, we have over 950 episodes here of the Brian Nichols Show going back to January of 2028. And the podcast version of the show is the only place you can catch all 950 plus episodes. So hit that subscribe button, download all unplayed episodes, start from the beginning. I guarantee every episode should leave you feeling educated, enlightened, and informed. And with that being said, we're going to go ahead and put a pin in today's conversation. Brian Nichols signing off here on the Brian Nichols Show for James Patrick. We'll see you next time.
Thank you.
Thanks for listening to the Brian Nichols Show. Find more episodes at briannicholsshow.com.